Hi guys, welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. Cues coming out of global markets are extremely, flat, at least on the GIFT Nifty. It is indicating at a very flattish start for our market. Yesterday as well, remember, we shut shop at that 22,300 mark, barely so. And, it was exactly where we ended back on Tuesday. So, very flat close. And, of course, today is the weekly expiry, so we may expect some bit of volatility today as well. Remember, the India VIX index has been up, for the 10th straight session. It has gained almost 70% in the last 10 sessions. So, of course, lots to watch out for in terms of cues. We'll be discussing all that with our guests on the show. We'll also be taking stock of L&T, which reported numbers, TVS, which reported numbers post-market, and, of course, the big one today, SBI. We'll be talking about that as well. So, lots to talk about over the next 40 minutes. But of course, before we do that and before we take a look at the top stories, I want to also remind our viewers to keep sending us your queries on our live feed on YouTube. We'll try and take them up with our technical experts on the show. But now let's take a look at the top stories at this hour then. Wall Street ends mixed yet again with the Nasdaq and S&P 500 closing with losses. But the Dow extends its winning streak for a sixth straight day, even as Boston Fed President becomes the latest to warn that rates will stay higher for longer. Asian markets are mixed with Kospi retreating from 1 month high. The GIFT Nifty is indicating a very flat start for the Indian market. Crude moves higher with Brent trading near that $84 a barrel mark as US stockpiles fall. L&T delivers a steady fourth quarter show with and beats guidance on revenue growth and order inflow for FY24. The engineering giant also guides for 10% order inflow growth in FY25, but margin guidance of 8.25% underwhelms. Among key numbers to track today, one-time wage revision may hit SBI's fourth quarter profit. Meanwhile, volume growth and impact of higher competition will be key to track for Asian Paints. Well, just about 10 minutes to go for market open. Let's see which way the Nifty swings this morning. Of course, it's the weekly F&O expiry today. So traders will be cautious, and the Nifty Bank Index also yesterday on the expiry for Nifty Bank, we saw a very a negative close for the Nifty Bank Index. So the Nifty Bank Index will also be in focus. But looking at the cues for trade, as I mentioned, Nifty Spot ended extremely flat, 22,300. India VIX, it wasn't all that elevated yesterday, but gained for 10 straight session above that 17 level. Mind you, in the last 10 sessions, it has gained as much as 67% or thereabouts. The Nifty Bank Index shut shop at a shade above that 48,000 mark, down 265 points. So 48,000 becomes a crucial level to watch out for on the Nifty Bank Index. Looking at the F&O cues, the Nifty open interest was up 1.2%. It added 1.2 lakh shares. May futures were trading at a 91.35 point premium, vis-a-vis a 79.3 point premium. The Nifty Bank open interest was up almost 0.9%, so to say, and added somewhere around 20,250 shares. Nifty PCR has dropped further, put call ratio at 0.7. Vis-a-vis 0.78 in the previous session. And, stocks in FNO ban, Canara Bank and Piramal Enterprises are the new entrants in the FNO ban. Still in ban, we have Aditya Birla Fashion and Retail, you have Biocon, Vodafone, Idea, Balrampur Chini, GMR Infra, SAIL, PNB and Z, all these continue to be in the FNO ban list. FIIs remain net sellers. In fact, yesterday's sell figure was quite huge, 6,700 crore worth of shares sold in the cash market. The domestic investors continue to provide support. They bought shares to the tune of almost 6,000 crore rupees in the cash market. But on that note, let me get on board our technical expert for today. Joining me is Chandan Taparia, who's the Senior VP Head Derivatives and Technical Research at Motilal Oswal. Chandan, great to have you on the show. We've been having a roller coaster ride with, when it comes to the equity markets. The Nifty, although we, recovered from the day's low yesterday and ended around that 22,300 mark. What are the support levels that you'll be watching out for in today's session? Would you expect 22,200 to be taken out, given the kind of volatility we have seen?
Thanks for having me. So really use the right word, that is the roller coaster ride. If you notice, yesterday Nifty closed on a exit flattish note, but in between we witnessed a decent swing in last couple of days. Just 4 days back, Nifty made a new lifetime high at 22,795, and yesterday it made low below 22,200 zone. So we witnessed some profit booking from highs, but major trend is still intact. But at the same time, your India VIX has seen a spurt from 10 to 18 levels in last 9-10 days. So spurt in the VIX is a reason that why market is turning upwards and downwards and finding roller coaster ride. Because of the higher VIX, we believe upside could be kept, but major trend is intact to positive. So because of that, buy on decline could continue. So to sum up all the data, we believe that any major decline could be bought, and we will continue to be with positive to range bound bias in the market. At the same time, I believe that 22,000 could act as a psychological support for the market as base of the index is shifting higher. So any decline towards 20,000 could be bought with the view that some recovery could be seen towards 22,450 to 22,600 level. So I'll initiate the bull call spread, or will go with covered call kind of setup on decline in the market. We'll attempt for bargain hunting in stock specific activity as well after the recent decline of last 3-4 days.
All right, that would be an FNO strategy for today, the bull call spread that Chandan mentioned. But Chandan, the Nifty Bank Index, 48,000, we've managed to defend that, yesterday. But would you see the risk of that being taken out? And what are your thoughts on SBI ahead of the numbers?
So first, if I talk about Nifty Bank, Bank Nifty is slightly underperforming. In last 7 trading session, we have seen a corrective move from 50,000 to all the way to 48,000. So almost 2,000 point correction. But now it is near its 50-day mark, but trend is intact. Immediate structure is slightly negative. We are witnessing lower top, lower bottom. So I'll closely watch key support at 47,777 or 47,500. I believe that zone could provide some support based buying to the Bank Nifty index. But overall, we believe till it doesn't surpass 48,250, it would be a bumpy ride for the market. So I'm closely watching 47,500 and 48,250 for any kind of decisive trend setup in the Bank Nifty index. Talking about SBI, we have seen some support based buying. However, on the other name, Canara Bank, PNB were finding pressure, but SBI was holding. I believe 795 could provide as a support, and because of that, some recovery could be seen in SBI towards 830 levels.
Right, since we are talking about, banks, I want to ask you about Bank of Baroda. A key overhang has been removed as the RBI has lifted restrictions on its BOB World app with immediate effect. It can now onboard customers via this app. Of course, this ban was brought into effect on the 10th of October of 2023. Since then, we've seen the stock come under pressure. But now that this overhang has been removed, would you look at a good bump up in today's session?
Yeah, because of that, some bump up could be there, and technically speaking, the stock has been moving in a broader range. It has been moving in between 250 to 285 zone, and recently it has taken support at the lower band of the range. So I believe that now 255 could provide as a support, and because of that, we can see a bounce toward 275 to 80 levels.
All right, 280 levels to expect on Bank of Baroda. But I want to talk about Bharat Forge. It was in the red at one point in time yesterday. We had bullish commentary coming in from the management who spoke about strength in defense business and turnaround in overseas business in FY25. The stock jumped as much as 15%, right? How would you trade into it? Would you say sell on rise should be the strategy here, or would you say that if you see any dip, use that opportunity to get into it?
No, I believe buy on decline could continue. This stock is doing well. Year on year basis, it has been moving up fast from last 4-5 years. If you look at the price setup on the daily and the weekly chart, it negated the lower lows of last 9-10 days and witnessed decent recovery by surpassing the multiple barrier of 1300, 1325. So I believe buy on decline could continue. As per the previous day close, 1370 would act as an immediate support, and with support of 1370, we can attempt for an upside move to us 1475 kind of level.
All right, that's the view on Bharat Forge. But Tata Power, came out with a subdued set of numbers. 15% growth in net profit, revenue up 27% or thereabouts, but margins have come in below that 15% mark. The stock has had a phenomenal run over the last 1 month, but in the last 1 month it has kind of fizzled out a bit, given negative returns if you see the 1 month chart. But should any drop be an opportunity to buy now? How would you approach Tata Power?
I think let it witness some profit booking decline because it has really done well in last couple of weeks. But in this week, it has started to form lower top, lower bottom. Technically speaking, a bearish candle has formed at the top of the trend. So I think some cool down could be there. I believe let it correct towards 410, 415. That could be the again bargain level for the counter.
All right, that's the view on a Tata Power. I want to ask about Bajaj Consumer as well. Bajaj Consumer as well, numbers haven't been all that great. In fact, net profit has seen a downtick of over 12%. Revenues are also down and margins have also seen a deceleration if you compare it on a YY basis. A buyback has been approved and, the buyback will be affected at 11% premium to the market price. But do you think for 11% premium, one should really tender their shares?
I think one can do because major trend of the stock is positive. Technically speaking, on monthly chart, it is completing a pole and flake kind of pattern. I believe in this market when other sectors are finding some pressure, better to be with selective FMCG or defensive name, which are comparatively having the lower beta and holding the gains. So technically speaking, one can apply 244 is major support. Upside, we are looking for 265, 270 marks.
All right, that's the call on a Bajaj Consumer. But as we get ready for the trading day, what would you be recommending in terms of stock recommendations for our viewers?
Yeah, so I have positive stance on capital goods name. So first it is buy on Cummins. One can buy Cummins with support of 350. One can look for an upside move towards 3600. Apart from Cummins, one can look at the Siemens. Siemens can head towards 6600 levels. Indigo is one more other counter where we are expecting 4-5% rally. So Indigo, Cummins, Siemens, these are the couple of names one need to keep in mind to trade the market and stay ahead of the volatility.
All right. I want to also get in your thoughts. Actually, hold that thought. We are just about seconds away from market open. Of course, we'll have to see which way the Nifty really swings because yesterday it managed to make a very solid recovery from the day's low. At one point in time, we saw levels of 22,350, but it did manage to defend that 22,300 mark and ended, at Tuesday's closing level. First tick is coming, at the first tick the Nifty is down, in fact flattish open as was being indicated by the GIFT Nifty. 22,300 has been taken out. We are very flat on the Nifty right now. Let's see what the Sensex is doing as well. Triple digit cut, but not a big cut, 100-point cut on the Sensex. But the mid-cap end of the markets is doing well. Yesterday we saw a very solid recovery in the broader market with both the Nifty mid and small cap indices ending in excess of 0.5% or gaining in excess of 0.5% yesterday. Today as well, extremely flat but with a positive bias for the Nifty mid-cap index. The BSE small cap index is up 0.3% and the bank Nifty as well has gained ground this morning, 48,200, almost close to that level now. Look at some of the other pockets then. IT was, one of the underperformers yesterday. Let's see what the IT pack is doing right now. IT continues to be in the red, very flat right now, and FMCG is another pocket I want to see how it's faring because, it has snapped out of its recent trend of underperformance. Today, some bit of, profit booking, extremely flat, 0.2% lower for that index. Aside of that, let's take a look at the auto pack. Yesterday, Hero Moto came out with numbers and TVS Motors also reported its numbers post-market. Good traction in auto stocks, 0.5% up for the auto index. I want to see what PSU Bank index is also doing. Yesterday, we snapped out of a two-day losing streak. Nifty PSU Bank index, gaining further ground, up over 1% or thereabouts. Let's take a look at some of the individual movers then. L&T on the back of margin disappointment and disappointing guidance for FY25. Disappointing margin guidance for FY25. This stock is down nearly 5%. Tech Mahindra, Tata Consumer, BPCL, Asian Paints, HDFC Life, these are some of the losers on the index today. BPCL and Asian Paints will be reporting their numbers. So ahead of that, we are seeing some bit of weakness. Eicher Motors, HDFC Life, TCS, Sun Pharma, Tata Motors, these are some of the other losers. On the flip side, you have Hero Moto extending gains yesterday as well. It was the top Nifty mover after the numbers. M&M, Bajaj Auto. So top three gainers on the Nifty are from the auto space this morning. HCL Tech is doing well, and so is Infosys. So TCS was in the red, but the other heavyweights are doing well today. IndusInd Bank, Maruti, SBI Life, Hindalco, Cipla are some of the other movers. I also want to pull up the charts of a TVS Motor and see how it's reacting to its numbers, which came out post-market hours. Margins were a beat. But in terms of profit and revenue growth, we saw a company missing estimates. Let's see what TVS Motor is doing. If you can pull up the charts for TVS Motor right now. All right, let's just go back to Chandan. Chandan, L&T, how would you trade? 5% downtick. Would you suggest a fresh entry?
So I believe that other capital goods stocks are doing well when I especially talk about Cummins, ABB, Siemens. But yes, we cannot ignore the L&T because one of the strongest name. However, we witnessed profit booking decline in last 4 or 5 weeks. So structure is weak, but one of the best portfolio name to pick on this bargain hunting. So let it correct towards 3250, 3200 zone. And I think one should ready to buy the counter for positional point of view with the target of 3800 to 4000 bucks.
All right. And how are you looking at IT stocks? HCL Tech and Infosys in the green today, but TCS is, among the top Nifty losers. How would you approach IT today?
So IT, I'll go with the Dixon, which is comparatively having the better price pattern. I believe a hold above 8450 can take it towards 8700 levels. So Dixon I'll prefer, but if you talk about HCL Tech, I think lower top, lower bottom is clearly visible on the weekly chart. TCS was holding the gains, but it has been consolidating. Even still, I believe TCS could be buy on decline. With the support of 3870, TCS can attempt a bounce towards 4100 level.
All right, that's the view on the IT stocks. But hold that thought, Chandan. We'll come back and talk about other stocks, and we'll take up viewer queries as well. But let me bring on board our next guest for today. Joining me is Gaurang Shah of Geojit Financial Services. Gaurang, chatting with you after a long time. Hope you're doing well. But look at what's happening in the market. It's been a roller coaster, so to say. Last Friday we hit a fresh high, but since then we've seen extreme volatility. So how are you positioned, at least ahead of that June 4 event?
Oh, comfortably placed, Nandita. Good morning to you. Yes, indeed, we are in conversation after a very long time. Good to see you this morning, and thank you very much for inviting me on this platform. So, as a brokerage house, Nandita, for the last 2 weeks, we could absolutely and very clearly see that there is fatigue on the screen as far as the markets are concerned. Despite the fact that last week on Friday, we nearly touched 22,800, we missed it by about 6 or 7 odd points. But last week, Friday, that day itself, we corrected also close to about 1% on Sensex and Nifty, and maybe a little bit more on the mid cap and the small cap. This volatility and choppiness is what we expected, and that's what we exactly mentioned in our market outlook for the week. Not only this Monday, but even last Monday, every week we come out with that market outlook. And we also mentioned that as we go deeper into this month of May and as we approach the monthly FNO expiry, by the end of this month and first 3 days of June till the time we know the outcome of the election, let us prepare ourselves, fasten our seatbelts for this roller coaster ride to get a little bit more aggressive with possibly, gravitational force getting tested for a lot of short to medium term investors. But if you are an investor, I think these are great times to look at some really strong names. We are also in the midst of fourth quarter earnings last financial year. So markets, as far as the larger index is concerned, Sensex and Nifty will go through a lot of choppiness, volatility. Mid cap, small cap will even display a larger volatility compared to the index and Sensex, that is Sensex and Nifty. We also need to see a little bit of lower levels as far as the India VIX is concerned. Nandita, we are beyond 17 if I'm not mistaken as of yesterday. I don't know what is the situation this morning. But even that has to settle down in case if we want to see some kind of stability. But let me also say this, Nandita, that there were a lot of leveraged positions, weak hands that had come into the market. And it is good to see this healthy correction so that we have a little bit of more excitement once we know the outcome of the election.
All right. Of course, as you mentioned, we have to buckle up for a roller coaster ride. But looking at the earnings season, Gaurang, wanted to ask you about L&T. Margins have been disappointing, even though order inflows have been very strong, right? And even the margin guidance of a little over 8%, single digit margin guidance has really disappointed Street, and we can see that being reflected in the stock price. Whenever I speak to experts, they say that L&T is a proxy to the, proxy play to the Indian economy. But for a fresh entry, would you advise, right now to get into this stock, or would you say that, wait out for some bit of margin recovery to kick in before looking at L&T for a fresh entry?
Honestly, Nandita, I think if you're going to wait out, you're going to wait out for the rest of the life. So don't try to time the market. Don't try to get onto that price point where you feel that at that point you buy, the stock price should not go down. And after you sell it, the stock price should not go up. That's wishful and Alice in Wonderland thinking, Nandita. You have to look at a larger picture. And for a stock like L&T, which is heavily into, cap goods engineering space, complex turnkey projects, hydrocarbon, infrastructure, defense, you name it, and they have their business in the balance sheet. You need to look at a much larger picture. I think quarter on quarter comparison, as far as your decision making, whether to get in or get out of the stock, is not going to be something very wise. Let me give a blanket disclosure over here, Nandita. We have a fundamental buy call on L&T for almost more than a decade. We recommending this stock. It is one of the most investor friendly stocks. In terms of targets, I think we were working with the target of somewhere close to about 3,800 to 4,000. Numbers are just out. Me and my team would need to, just look at the numbers and possibly see any kind of revision upside, downside. But we do maintain a buy call. And my sense is that defense is going to be something which is going to turn out to be very big for L&T. They are working big time as far as the Indian Navy is concerned, and also for other complex projects. So rather than trying to time the market or a particular stock, go in, take the dip, take the plunge. Don't go in 100%, but at least take a 25, 30, 20% exposure depending upon your risk-taking capability and capacities.
All right, that's the view then. Don't try to time the market. That's the advice from Gaurang. But Gaurang, from the two-wheeler space, how are things looking now? Because Hero Moto reported numbers yesterday. They were largely in line. The management commentary was very, bullish, so to say. And they are looking at new launches in the first half of this fiscal. And TVS Motor also reported a mixed set of numbers, so to say, because margins were a beat, but revenue and profit lagged estimates. But within the two-wheeler space, Hero Moto is the cheapest one available right now. So would you say that the runway for upside, at least with respect to stock performance, is tilted in favor of Hero, or would you prefer a Bajaj or TVS vis-a-vis a Hero right now?
So I agree with you, Nandita. In terms of catch up, Hero was the last one to possibly start the race, and by that logic, it will end up going further a little bit more than what the Bajaj and the TVS have done, because they've already done their part in the first part of the beginning of this run-up. I would also like to add one more name over here, that is Eicher Motor, which is into commercial vehicle, commercial buses, as well as high-end Royal Enfield segment. We have coverage on all four. Let me give you a disclosure: Eicher Motors, Hero MotoCorp, TVS Motors, Bajaj Auto. And the good part about the two-wheeler segment is, Nandita, that it gives you an indication in terms of the recovery in the semi-urban and rural Indian markets. And with the rain gods being kind enough this monsoon, if we and the estimates which are put forward by the Met Department in terms of above normal to a good monsoon this year, I think this demand is going to go much more stronger. And let me tell you one thing, Nandita, I travel length and breadth of the country, especially to the tier 2, tier 3 cities and further down. Earlier, the demand from semi-urban and rural used to be at the entry level or maximum mid-size segment motorcycles or scooters. Over the last 3 years that I've been witnessing, this has climbed up to mid-size and high-end motorcycle segments. So that's going to be a large contributor in terms of top line numbers getting better for two-wheeler companies and also the profit margins. So we remain positive on all four names: TVS Motors, Bajaj Auto, Hero MotoCorp, as well as Eicher Motors.
Want to just shift focus and talk about some of these gold loan NBFCs. Reports suggest that RBI has asked, NBFCs to strictly adhere to a cap of 20,000, rupees in cash loans, and this is according to a letter that apparently RBI has sent to NBFCs. Now, this comes after we saw that a ban on gold loans for IFL Finance, right? And we are seeing sharp reactions coming in on stocks like Muthoot and Manappuram. How would you view this? How would this development, bode for some of these gold loan companies?
So, if your logic, Nandita, is that if you are going to keep gold as a precious metal as the base of your investment decision, then it is not necessary. As a fundamental analyst, Nandita, we always advise diversification into different asset classes. So if your logic is that you're keeping gold prices in mind, and then if you decide to take an exposure on a gold loan finance company, then I would advise that why don't you take exposure directly on gold? You have available instruments today in terms of gold sovereign bonds. There are almost more than 12 odd gold ETFs which are listed on the Bombay Stock Exchange, National Stock Exchange. It is similar to buying shares. You don't have to follow any different methodology as far as purchasing gold ETFs are concerned. And there is always this regularity risk when it comes to gold loan companies. This is not the first time, Nandita. If you recall a couple of years back, similar steps were taken by Reserve Bank of India because of the unsecured exposure that was going, and more importantly, the rule that one needs to follow as far as the credentials or credibility of that borrower is concerned. That was not happening, and that would have led to a systematic risk and a domino effect in case of that not would have been controlled by the Reserve Bank of India. So similar steps, I believe, are going to be put in place. So my advice to the investors is that if you're looking at gold as an asset class, and on that thesis, if you're looking at gold loan companies, my advice would be that look at gold sovereign bonds and gold ETFs. By doing that, you are mitigating that risk involved in terms of regulation changes.
Interesting point you made, Gaurang. But also want to talk about Bharat Forge. Of course, it was a big winner in trade yesterday after good commentary coming in from Baba Kalyani. Of course, defense business has done phenomenally well. 4x FY23 sales, and they've also said now that the overseas business will recover going forward in FY25. But would you be concerned on rich valuations when it comes to Bharat Forge? And also, do you see any risk of cyclical headwinds emerging going forward?
I don't think so, Nandita. You remember before this defense thing, all of us used to talk about when it came to Bharat Forge is the export number for Class 8 trucks in the Americas. And that used to be the thumb rule or parameter in deciding which way the stock prices go. If that number is good, the stock would go up. If it is bad, the Bharat Forge would come down. But now nobody talks about that Class 8 truck chases, etc., etc. Now we talk about defense. And if I'm not mistaken, I was reading an article, I think about a week or 10 days back. There were a senior level defense personnel from Ministry of Defense as well as from the armed forces which had visited the facility of Bharat Forge as far as the defense supplies are concerned. And our sense is that whether it is a public sector defense company, Nandita, or a private sector defense company diversified like Bharat Forge or L&T or anything else, they are going to ring in the earnings at a much larger space and a higher side, given the kind of order books that these companies have. And always remember one thing, when you are working for armed forces and defense, as far as India's security is concerned, the equipment that you make are very precise and high technology oriented. It takes time to get approval for a prototype, but once you get that approval and start your mass scale production, that's where the game changer comes in. So we remain positive on Bharat Forge as far as the fundamentals are concerned. We have a coverage over there.
All right. Talking about the big one, SBI, which will be reporting numbers today, at least when it comes to private banks, they have, most of them have given us a positive surprise on the NIM front, right, the NIM front. But for SBI in particular, profits could be hit by that one-time wage revision, right? And margins are likely to be under pressure due to a higher cost of funds. Are you penciling in a subdued quarter for SBI?
So one-time hit because of wages would not be something that will bother me, to be very honest, Nandita. In fact, SBI is one of the top picks as far as the public sector banks are concerned on the fundamental side. And at sub 500, nobody wanted to touch SBI. At 800, people are recommending with higher targets. Right? So we recommended SBI even at 500. I'm sure you would recollect discussing SBI and some couple of other public sector names with me in our earlier shows. And our sense is the entire financial, that is BFSI segment, including private sector bank, public sector bank, strong NBFCs, microfinance companies, small bank finance companies are going to report robust numbers on fallback of the credit demand that is likely to go up in the next couple of years. Their balance sheets are becoming cleaner and leaner in terms of recovery of provisioning, net and gross NPAs coming down. Interest rates have been at a status quo for 7 credit policies. If the inflation doesn't play a havoc, possibly in the second half later this calendar year, you might see an initiation of rate cut on fallback of the comments and advices given by the Monetary Policy Committee to the governor. So that's going to be a big game changer. So as a investment idea, we remain positive. Since numbers are today, I would not want to make any forward-looking statements.
All right, that's a view, positive view on the entire BFSI space. But last question really on Piramal Enterprises. They have announced, a merger with their housing finance subsidiary Piramal Capital. Of course, shareholders will get one equity share and, one non-convertible pref share of Piramal Capital, and the merger will be completed in the next 9 to 12 months. Now, this is the second group to do so after the Aditya Birla Group. Would you say that this would create value for shareholders? Today, at least, we are seeing some bit of reaction on the stock. Of course, the numbers also came out and, they have reversed some, an amount of 1,500 crore on account of recoveries from AIFs as well in the quarter gone by. How are you viewing Piramal Enterprises in the wake of all these developments?
So, honestly, I did happen to just glance through this particular news. I have not really read in depth, or I have not read the fine prints or in between the lines. And I believe this is an unlisted subsidiary of theirs, if I'm not mistaken. At least that is what I read. We used to have coverage on Piramal Enterprises earlier. On the fundamental side, Nandita, I really don't recollect whether that coverage still holds. So I won't be recommending any buy, sell and hold. But I guess if the management has worked upon their wisdom, it should create value over a period of time. No specific comments because I don't recollect whether we have a coverage or not.
No worries, Gaurang. But, just want to ask you, since you've been traveling to tier 2, tier 3 cities, we've seen, FMCG companies give very, positive commentary on rural demand, and looks like, rural demand finally is on path to recovery. So would you recommend a buy on some of these FMCG names, perhaps the smaller ones like Dabur?
Well, even earlier, to be very honest. Oh yeah, honestly, Nandita. So what I've seen is a shift from Lifebuoy to Dove. So that's the kind of premium segment that people are looking at as far as semi-urban, rural India, tier 2, tier 3 cities are concerned, even lower categories. And even last financial year, of course, we are witnessing the fourth quarter for last financial year. But second, third quarter for FMCG companies was especially challenging given the input cost going up, palm oil issues getting restricted because of Thailand putting some restrictions, margins coming under pressure, volume growth not supported by semi-urban, rural India. Even in metros, tier 2, tier 3 cities, people were opting out for lower end products rather than high end products. But all that is now being of the past. So we have almost about a dozen coverage as far as the FMCG universe is concerned, starting with your HUL, ITC, Nestle, Britannia, Dabur, Marico, Tata Consumer Products, Godrej Consumer Products, Imami. All these are featuring in our coverage. And I always say one thing, Nandita, India was, is and will always remain a consumption-driven economy.
All right, that's the view then. But Gaurang, always a pleasure chatting with you, and I really like the interesting conversations we have, and look forward to interacting with you sooner sometime. Perhaps in the coming weeks. Wish you a great day going ahead, and let's connect sometime soon.
Sure, look forward to. Likewise, thank you.
Thank you. Well, with that, Chandan has been waiting by very patiently. Chandan, let's quickly dive into all the queries that we are getting this morning. First one is coming in from Pooja Khanna. She wants to know your thoughts on Zentech. This stock has been under pressure. In the last 5 sessions, we've seen 15% being shaved off. She's making a bit of a loss here. The stock is at around 925 levels. Should she book losses here, or should she continue to hold?
I think now after the corrective move of 15%, I don't advise to exit. Let it find support near 900 zone, then some recovery could be there. So from 900 to 985 kind of recovery could be there, where she can plan to exit.
Okay, that's the view then. Hope that answers your query. But Rakesh wants to know your thoughts on a Canara Bank. He wants to know, after good results and good dividend announcement, why was there a drastic drop after declaration of results? That's his query. He is holding 250 stocks at an average price of 590. He wants to know what he should be doing going forward.
So I like SBI more than Canara Bank. Canara Bank has seen profit booking in last 4 trading session all the way from 632 to 555 zone. So I think pressure will be there. It would be tough to get the price of 590 as of now. I believe it should hold support of 545 and then it can see recovery to us 590. So 540 to 590 kind of zone he has to play. And if he's ready to shift towards SBI, then I think more stability could be there with some upside.
Lots of queries on banking shares this morning. Tanisha Jain wants to know your thoughts, your long-term view rather on Kotak Mahindra Bank. Numbers are good, then there was the RBI setback as well, but the stock has made a good rebound after earnings. Long-term, would this be a preferred stock amongst the other private sector names?
Tanisha, I'll focus more on ICICI Bank and Axis Bank rather than talking about Kotak Bank. However, after a sharp decline, it witnessed some recovery, but the concern is this is having a capped upside, looking at the price behavior of this stock. So once it goes near 1700, again momentum may fizzle out. So I'll suggest better to be with SBI, Axis Bank or Axis Bank rather than getting inside Kotak Bank.
All right, that's the view. I hope that answers your query. The next query is coming in from Mayank Vyas. He wants to know your thoughts on Voltas. Of course, numbers were underwhelming to say the least. He's holding on to some gains still, and he wants to know whether he should ride the volatility or exit.
So some sort of volatility could be there. This stock has seen a decent run up from 1050 to 1500 and again correcting more than 10% in the last 4 days. So volatility could be there. If you are holding for long term, then you can hold, but for short term, you need to follow the support of 1250.
All right. And what's the view on BSE then? The numbers came out yesterday. The stock is 0.5% lower. Jeet wants to know your thoughts on whether one should look at a fresh entry when it comes to BSE.
Yes, overall positive view. Now let it sustain about 2900. In that scenario, you can see a run up to us 3200 level. So overall positive view on the exchange and the broking rated companies. And one stock I want to recommend here is buy auto stocks. Already I've recommended on Escorts. I want to recommend on M&M and Hero Moto. Those who are listening to me can buy M&M with support of 2190, expecting 2280 to 2300 kind of level in M&M. Apart from that, I believe good recovery could be there in Asher Motor, Hero Moto, or counter like TVS Motor. So positive on auto name. I think most of these stocks can deliver the return of 3 to 6% over next 1 or 2 days.
All right, that's the view then. Chandan is also recommending some auto stocks, so keep a note of that. But let's also take up a query on Zomato. This one is coming in from Adit Taneja. He wants to know your thoughts on Zomato. Of course, very close to 52-week highs, but over the last 1 month, it has lost some bit of fizzle. Would you still play a Zomato for higher levels, say somewhere around 250 or so?
Yeah, so like Mr. Taneja, we like this stock, but only problem is it has rallied by more than 3 times. We were tracking the stock from 65 and now it's near 200 level. So major trend is positive. Already it has seen decent run up, so some capped upside could be there. So you need to go with buy on decline stance. Or looking at the price structure, 185 is the support. So any small decline could be bought. Overall, we are looking for an upside move towards 210, 220.
All right. Couple of more queries then. Raj Nihalini wants to know your thoughts on a Garware Tech. I can see it's 1.5% down right now, and even over the last 5 sessions, it has lost quite a lot of ground. 15% shaved off. In fact, 500 odd rupees away, 700 odd rupees away from 52-week highs. I think it has been stuck in a downtrend for quite some time now. How would you approach this stock?
No, I'll avoid even looking for some more weakness. If you are holding the position, try to exit. The stock can see further corrective move of 5 to 10% from current level as well.
One last query then. This one is coming in from Debu K. If you track Adore Welding, if somebody is holding this stock, how should one go about it? Because in the last 1 month or so, it has lost somewhere around 6% or thereabouts. Do you track this stock? And if somebody is invested in this stock, should they look to exit and switch to some other sector?
I think better to avoid this. Liquidity is very less. 10,000, 15,000 is the trading volume. Trend is negative. 1300 is the major support. Below that, crackdown could be there. So I think one can exit from here, can go in selective auto name to stay ahead of the volatility to generate some alpha.
All right, then that's the view on Adore Welding, and with that we've come to the end of the query segment. But Chandan, we've also come to the end of the show. So thanks a lot for taking out time and joining in this morning and sharing so many strategies with us, and also helping our viewers navigate their shareholdings as well. But thanks a lot. Wish you a great trading day, and look forward to interacting with you again sometime soon.
Thank you.
Well, with that, of course, we're completely timed out on opening bell. As we leave you guys, let's just see what the market is doing. Flat, but with a negative bias. But mid-cap index is holding on to slim gains, and the Nifty Bank index is trading in the green. L&T, of course, the top loser on the index on the back of margin disappointment and disappointing margin guidance as well for FY25. Hero Moto, another 6% uptick after 3% gains yesterday. So in the last two sessions, Hero Moto is up almost 8 to 9% or thereabouts. M&M, Bajaj Auto, Maruti. So auto stocks, the flavor of the day. And advanced decline ratio evenly distributed between gainers and losers. But with that, thanks a lot for tuning in. Have a great day and stay tuned to Money Control for all your other news and updates.